All right. You should be able to hear me now. All right. Okay. So today I'm going to be brief and I'm going to be quick. I'm not going to take too much time. And so let me set myself up here. Let me put all my pairs in order. I just restarted my PC. That's why it looks like I'm a bit late today. I was restarting my PC because it was playing up. And once I restart it, it does things like this. So I need to make sure I have everything. Okay, now everything is perfect. All right. Let me finish off by clicking these things off. All right. Okay, good evening. I hope you've been practicing the things that I have been teaching. If you've been practicing the things that I've been teaching you so far, all my Facebook viewers, I think you should be seeing changes in your trading. If you are seeing changes in your trading, that's very good. If you are not seeing changes in your trading, then probably you've not been practicing. Because if you truly have been practicing, then you will see difference in your trading. All right. So today, what I'm going to share with you, it's very brief and simple. And again, it's one more reason why I keep saying you should join us in EFX so that you get more training, you get more understanding. For the last 2 weeks, I think last week I did not do any session, and because we had a Thanksgiving for the US, so last week we were all observing the Thanksgiving. But today I'm here to give you more insight in the market. Obviously, with Enigma, now you should be able to know what to do, right? Because all I needed to get your attention to is basically you need to trade it with the trend and don't trade it when it goes into consolidation. Now, the VIP members or EFX members, you know what I mean by when it goes into consolidation, because for the last, I think last week and last 2 weeks, or let me put it this way, this week and last week, the lessons that I covered, it actually gives you the hint and when to use the Enigma. So hopefully you should be good with Enigma going forward. And let me get rid of this. So I'm not going to talk about Enigma today, but I'm just going to give you the secret in trading optimal trade entry. Okay. I'm going to give you the secret in trading optimal trade entry. Now, what is optimal trade entry, or what is OTE? OTE is just a pullback to what? 50%, 618 to 79 retracement level on a fib. Okay. It's the pullback to 618 to 79 retracement level. So what are the things you need to see, okay, for you to be able to take the optimal trade entry? And also in a sell, what are the things that you need to see that will make it high probability? All right. Now, you will have times that price will pull back and it will work out. Okay. But if you do have the things that I'm going to show you today, okay, if you have them here, then that's when you do have a loaded gun that price is kind of 90% going to move in your favor. Okay. So yes, you can trade the pullback all the time, and that's fine. But if you want to just wait for the high probability ones, then you might want to take a pen and a paper and then write what I'm going to show you. Okay. Let's begin. Now, I want to start off with telling you that the market is always driven by an AI. Okay. If you don't know that, now you know. It's not it's not um it's not real people or someone sitting there controlling price, right? It's driven by algorithms or AI. So these AIs or these algorithms, they kind of have rules and instructions that they follow. All right. So if you understand that, then for optimal trade entry to work, there has to be some rules that governs that pull back to 618. Now you've seen that lots of people use Fibonacci and it works, but they don't know why it works and when it does work. Okay. So if you understand that the market is driven by an AI, then what I'm going to give you are the things that you want to see in a pullback. When you see those things in a pullback, then you do have potentially a move that will unfold in your favor. So let's start. What are the signatures, or what do you want to see? Since we are dealing with something called algorithm, it's going to have rules, and one of the rules is time. Okay, one of the rules is time, and then price. Okay, it's time and price. So time meeting price is what will make the move high probability. Now, when I say time, what do I mean by time? Well, there are times that the market will be full of orders, or market will be there will be a lot of participants. Let me put it that way. There will be a lot of participants in the market because that's when everybody around the world is obviously trading, and there will be times when the market goes quiet because people have got life. They don't live on the market, so then they go and do what they have to do. So the time aspect is important, and then the price, because price can be trading at any point in time. But if people are not in the market ready to do something, then the price is irrelevant. Okay. price is irrelevant. So if you're going to trade a certain price, then it has to meet time that people are going to be in front of the screen, or people are going to be in the market. So the time aspect, I'm gonna give it to you. It's mostly going to be the London session and then the New York session. Now, I'm talking right now in terms of day trades and scalping, right? When it comes to swing trades, I'll also give you just a little bit about that. So time will be London and then the New York session. Those are the two times that you're gonna get a lot of participants coming in the market. All right. So the aspect of time can be easily defined as trade when we are inside the London or the New York session. Okay. Now, the price aspect is going to be the market structure. So, what is market doing during that time? Is market going up or is market going down? If you can determine what the market is doing at that time that people are going to be in the market, i.e., institutions, banks, hedge funds, and all those people, at the time that they are going to be in the market, what is price doing? Is it going up or is it going down? Can you define it? Because if you can't define it, then that is going to give you everything that you need. So let's say price is dropping, all right? Price is dropping, and then we meet time. This is London session, right? And then all of a sudden, as soon as we hit London session, you see price pulling back up. So if you see price pulling back up, then there's a high probability that, if you measure this range between the high and the low, price is going to do what? Price is going to trade to 618 and then continue going down. Why? Because that's the price structure that time met with. So it's either institutions are going to say, okay, we don't want to go down again, and then it will change direction. And then this is the London session, right? And then maybe New York session, price will then come back down here to give you the same kind of level pattern, which is trade back to the 618 to the 79 retracement level and then continue going higher. All right. So depending on the market structure that meets the time will give you what you're supposed to do. So if you wait for London session and then you look at price, it can give you what you need to do. Now, I'm going to show you an example that I actually traded today. Okay, I actually traded it today. That it was time that met with price and then it led price to go up. Okay, so what else do you need apart from the price? Well, there are certain things that you want to see in price when it's retracing. So the aspect of time is now covered. You understand that you need to be in London or New York session. Now let's talk about price. When it comes to price, what you are looking for, okay, it's the impulse leg. Because what you're doing is you're going to buy the retracement or sell the retracement. So you're going to be looking for the impulse leg, right? Within that impulse leg, let's say price drops down here. Within that impulse leg, what do you want to see? Okay, what makes it a high probability that price is going to come back into the 618 and then continue between the 618 and the 79 retracement level and continue going lower? You want to first of all see an up candle in a impulse leg to the downside. You want to see the last up candle not just the last up candle, but you want to see a what we call a fair value gap, or a small gap in front of the up candle, and then a down candle. So you want to see something like this. I'm going to draw it. So if it's two candles, you want to see something like this. Okay, it's not the prettiest drawing, but you get what I mean, right? So this is the candles wick, and this is the candles wick. So these are all down candles. So in this case, price is pulling back up. So this is the last up candle, right? You want to see this here, that there. That's what you want to see. Okay. If you do see that, and that meets with time, and we retrace there, this is when you do have a loaded gun ready to fire. If we are trending down and it retraces and it meets the time aspect of it, which is the landing on the New York session, then pulling your fib from this high to this low, this is going to be roughly where 0.618 to the 79 retracement level will be. And then you're just going to take a sell at the 618, leaving your stop loss above the up candle, and then expect price to go down. The same thing you're going to do on the downside. So on the downside, if you have something like this, it's taking too long. Okay, if you have something like this, right, and we have price pulling back down, I didn't draw my wicks. Okay, so you have something like this in price, which is a gap. When we hit the time of the day, again, this can be London or it can be New York. We retrace there. What do you want to see? You want to buy it for price to continue going higher. Okay, you want to buy it for price to continue going higher. Why? Because that they are not, or whoever is doing trading, okay, let's say hedge funds, institutions, because of this gap here, because of the trend that price is right doing prior to coming to that time, they are not going to come in and then look to sell it down, because price is not going to do that. Remember I said earlier, right? We believe that price is driven by what? An AI, or is driven by an algo. So the AI will not be permitting price to go down here. Even if a hedge fund or an institution wants to do that, it's not going to deliver price to the downside. It will try to deliver price to the upside. So whoever wants to facilitate a trade at that time, it's automatically be put to that side. If you try to sell it, chances are, I don't think they will. Okay, and that's how prices sometimes reached, or prices, it's predictable, because it's not going to do that. Okay, if it has this phenomenon here and price is bullish, obviously I said that earlier, you need to confirm that first, then it's not going to do that. It's just going to go higher. So hedge funds or institutions, they are not going to come in here and be looking to sell it, because that's not the price action that is leading to what is happening here. So therefore, they're going to look to buy it to go and attack this high. Okay. The other thing that you can also look for, apart from this one, okay, it's let's get rid of all this drawing. It's, let's say, one down candle and then one big up candle like that, and then another one. Okay, something like this. Okay, there's a difference between the first one and this one. Okay, this one is one big candle leaving the down candle, and the other one you have a couple of candles, okay, leaving here. All right, so there's a difference. I want you to notice the difference. Okay, this, you're looking for something like this, or you're looking for something like that, which again, the same thing, it will meet time of the day. And then you look for price to do what? Come here and go up, come here and go up. Okay, now this is for day trading slash scalping. This is for day trading slash scalping. So how about swing trading or long-term trading? If you are swing trading or you're long-term trading, time is not relevant, but there are other things that are relevant, which obviously I teach that in the VIP section. I'm not going to teach that here, but if you are doing swing trading or position trading or even short-term trading, which does not require the time, then you want to see the price giving you the same thing. So if you're buying, you want to see this, you want to see this. If you're selling, you want to see the opposite, which is you want to see this. Okay, for price to come back up here and then go down again. Or you want to see a couple of candles. Okay, couple of candles dropping, and then you want to see price come back up and then go down. So in the short-term trading and swing trading or position trading, you want to see this kind of element in price. When it comes to day trading and scalping, you want to see the same thing, but time is important. Okay, time is important. So hopefully what I've just said here makes sense to you. Now, for me to confirm that it makes sense, can I get an X? Just type in X. Let me know that it makes sense to you so I can go in there and then show you some examples. So give me an X if what I just said here makes sense to you. Can I get an X if what I just said here makes sense to you? Okay, cool. All right. Thank you for confirming. So if that makes sense to you, then let's go into price and then I'll show you what I did today. So let's go on to here. I still have the charts there because that's what I did exactly today. Look at the dollar index, right? This is the dollar index, and today, this afternoon or this morning, I was anticipating dollar to continue going higher. Okay, I was anticipating the dollar index to go higher. So what I did was I waited and I drew a line right here on this down candle and I was waiting. Why was I waiting? I was waiting for price. And it did that not just today, it did that yesterday as well. So let me put the one that it did yesterday here, right there. So those two examples that I gave you, they are all present on this price chart. So if you look at the last up candle, all right, if you look at the last up candle, we went up and then left this down candle, right? So price came back down. Look at the time that it came to that price point. It came there at exactly 2. Now that time is what I'm talking about. It's important because it's when big institutions, hedge funds, all those, big gurus out there, these are the time that they want to be facilitating a trade. So this is the time you want to see price come down here, because when it gets there, that's when they will be doing what? They'll be doing their buying. So right here, let me drop down to the 15 minutes so you see it properly. This is yesterday, by the way. So yesterday, I'll show you the trade I took when price did hit this level, because this is the dollar index. We don't trade the dollar index, but looking at it on the 1 hour time frame, I'm just dropping down to the 15 minutes. So you see the time that price came there. So see the time that was that shaded area. That's my entry time. I deemed it as, if I'm going to be looking for an entry during the day, this is the time I want to see price drop to my entry. Okay, so between 1:30 GMT and 3 GMT, that's the time I want to see price hit my level that I want to do a trade. I want to take a trade, basically. So once price dropped here, what does it do? It rallies. Now, what I wanted to show you is obviously the power of the fib. So I'm going to draw this low to that high. Let me zoom out a little bit. I'm going to go from this low to that high right there. Okay. And then shade the optimal trade entry between the 618 and the 79 retracement level, which is this one right there. Okay. And then notice that is the 79 level. That's the 618 level. This is a 70.5 level. Notice that we hit the 618. Sorry, here. Let me start from here. We hit the 618 there, but the time aspect, right, it's not relevant. No one or no bank, right, it's in the market at the time, or no institution is in the market at the time to be doing any trade. So nothing happens here. Price straight through that and it goes down. Why? Because from the end of that yellow line going forward, bankers, institutions, they are done for the day. Okay, so they are not interested in what's going on. They're only gonna come back to the market during Asia to start looking at what they are going to do for the day. But they are not going to be taking trades. They will be placing trades, but the trades that we're placing will kick in from 7, which is the landing session. All right. It will kick in from 7, which is the landing session. So once we hit the landing session, then you see this big spike. Obviously, price did not trade to the exact level that they wanted to facilitate the trade. So then it went lower to the exact level that price needed to get to, which was that 1 hour time frame last down candle, which was this one here. And then they came in and then they're buying. So as price hit this at the same time, let me bring in the British pound, because that's the trade I took with that idea. So let me bring in the British pound. Let me zoom in right here. You will see. Let me turn the British pound on as well. The same time that price was hitting this, right? The same time British pound was doing the opposite. So price came and hit this. Now, let me use the fib again between this high and that low. Okay. Time, and then price drops. So that was the trade I took yesterday. as price was hitting this at the time of the day, that's when I took this trade for it to drop. Okay. Now that was yesterday. It did exactly the same thing today. So today, price left and went up. It left what the drawing that I did, right? We need to see the gap or this. These two, one of them has to be present. The gap or this. Okay, and then price went up. So what I did was I drew a line and then I'm waiting for 7 to 9 and I'm waiting for 1:30 to 3. Listen to that part properly. I'm waiting for 7 to 9 or 1:30 to 3. That's the time price needs to get there. If it's not there, if we get there before that time, I'm not doing anything. I'm only gonna do something if price gets there at that time. Okay, remember that. So I'm gonna keep going forward. This is the 7 to 9. So the 7 to 9 price was up here. So there's no way I'm gonna take any trade. Let's keep going forward. Right here, between 1:30 and 3, price gets down there. Notice that it got there earlier, nothing happened, right? Nothing happened. Nothing happened. But we got into that specific time, which is the 1:30 to the 3, and then price starts moving. Okay, so that level, match it with time, plus what I was saying, the secret to trading the fib. Now, if I draw the fib, guess what? Between this high and that low, price drop to what? 618, and then off it goes. So today, that was the trade I took. Now, I was targeting this equal high, this high, and that high from here to there for the dollar to do that. And that corresponds to the same thing with the British pound. Between this high and that low, price trades to 79 retracement level at the time, and then price drops. Okay, so I took another trade on this one as well. So I took one here yesterday and I took one here today. Did what I just showed you make sense? Did what I just showed you make sense? All right, let me show you another example. So these are the ones I traded today. I'm going to show you a couple of examples so you can start looking and going into the charts and studying it so you can get good at it. Okay, remember time and price. Let's go back to one window and let's squeeze out and choose any random pair. Let's choose okay, let's go to the yen pairs because there was an example that happened on pound yen yesterday. An example that happened to pound yen yesterday. Let's drop down to the 1 hour time frame. Okay, here, that's a trade. I did not take this trade yesterday. Okay, I'm just showing you another example. So between this high and that low, okay, we have this type of candle. Okay, we have several down candles. So between this high and that low, that's a good impulse leg. Now, if you look, what is the price structure? It's bearish. Okay, so this is just a pullback. Now, let's see. Let's pull the fib from this high to that low. We have our optimal trade entry. But notice that price coming to the optimal trade entry, it does not meet time. Okay, it does not meet time. So what will price do? Price will keep going up, or price is not going to move down. But as soon as we hit the London session, the 7 o'clock, okay, this is the 6 o'clock, 7 o'clock, then the gurus, the bankers, the the institutions, they jump on and then they sell it down, right? They sell it down. So you have to know when price is going to move, and that's the aspect of time. The price itself means nothing if time is not there. Okay, same thing happened today between this high and that low. Okay, I already marked out the level I was anticipating. Again, I did not trade it because my bias on this is bearish, but my position is all the way up here. I took my sell up here, so I'm holding on to it for a continuation to the downside. I just didn't want to take extra position here, but I could have. I took other trades on other pairs. So between this high and that low, I was anticipating to come to that very level right there where I shaded my shaded box, where it is. So let me draw the fib again between this high and that low. All right. Do we have that price pattern here? Yes. What is it? That small gap on the H4 you see properly is a big down candle. But on the lower time frame, there's a small gap there. Meeting with what? Time. He came there between the 7 and 9, right there, 9 o'clock exactly, and then price does what? Price drops. Granted, it did not drop that much, but it did the very thing that it's supposed to do. I think the institutions were not interested in selling this today, so price just hanged around. But look at the precision. Okay, it comes to the fib level right there, and then meeting with what? The time, then price rejects. Okay, price rejects. I think there was another example on EuroCAD. Let's go to EuroCAD because this one I traded it yesterday. Was it yesterday? Tuesday? Yes. Let's remove. I can't remove these drawings because I need them. So let me do something like this. I'm gonna need all of that. So let's group and hide all of that. Okay, that's good. Now let's drop down to the lower time frame. So this is the EuroCAD, right? There's an impulse leg here. What was the trend prior to that? Bullish, right? Price is bullish. So we have an impulse leg between this high, between this low and the high. Do we have that void in here? Yes. So I'm going to draw the line. I'm going to draw the fib. Right? So let's look at time. What time does it get to the 618 to the 79 retracement level? Exactly 3 o'clock. Okay. So what is going to happen? Time has met with price. Therefore, price is going to rally. Did price rally? Yes. Okay. That's tradable right there. From here to go up, that's tradable. Obviously, you'll be expecting price to go up here, and it took all the way to today for it to accomplish, but it did it. All right. Now, let's look at what happened today. Now, I did not take the one that happened today. So, let's do that same thing. We had an impulse leg from here, this low to go up. Oops. An impulse leg from this low to go up. Let's look at it again. Price is retracing. Do we have the signatures that are pointed? Yes, we do have it here. All right. So we have a gap. Price moving up from a low. We're retracing. What time is it? 7 o'clock. It hits the 618 level. What is it going to do? Are the banks, are the institutions, are the quote unquote smart money traders, are they going to come in and sell this? Nope. They are going to come in and they're going to buy lots of it. And that's what they did. But context was like yesterday we moved into this, so we're going to go above this high. So today, this was just another confirmation that price was going to come up here. And it did that beautifully. So this week, if you understood what I just talked about today, you would have got a beautiful trade here, a beautiful trade there, two beautiful trades on the British pound. You would have got another trade, I think two on the pound yen as well. Okay. If you want me to show you more, I'm going to show you one more, which is the one I traded this one. Let me see where I took it. Okay, let me use the high time frame as well. Okay, I'm going to use the high time frame to show you examples of using that same thing. What you'll be looking for is a move away with the gap. A move away with the gap following price direction. Okay, it has to be following price direction. So between this high and this low, I'm going to use the fib right here. Now, like I said, when you're doing on this higher time frame, forget about time, but the element of price has to be there. So when you're doing on the higher time frame, you're not going to be concerning yourself with time, but you have to concern yourself with price. So you have to see the things that you want to see when you're doing it on the time aspect. You have to see the same thing on the higher time frame. So here there's a gap. Nice one. Big drop. Price retraces. And then it drops back down. All right. Same thing happened here. Small little one. Right here. We had a big drop off from this level. So this high to that low. Price retraces to 618. And then it drops. Okay. Let's see if I can find more examples. Even here, that small little one, if you do that same thing, okay, price gets into 618 and there is some form of a reaction. Why? Because of that, okay, that candle right there. Obviously following the trend. Let me see if I can find another one here. Right, this big move away. Let's measure it. between this high and that low. Okay, price come to 618 to 79 retracement level, and then pump up one more time, and then pump up again. All right. So the secret in trading the fib is what I've just given you. You need to see this price action. You need to see that price action. Okay. You need to see not this. Okay. This is not good in the sense that if price is coming back down here, I will not use this because I don't see anything here. There's a small little one in here, but apart from that, I don't see anything. So if price is coming down, let's say I'm going to use this high. Let me just do this. Okay. Let's say this low to that high, I'm going to use this. Okay. And I say I want to buy 618 to go up. I don't have anything that confirms that if price gets here, it's going to go up. Why? Because that's not the sort of price action you want to see. So if price is coming down, there's a high probability price is going to go below this low. I don't know if you've gone below that low yet, but if price is coming down here, you don't expect this to go up. You expect it to go down because there's nothing here that supports the idea that price is supposed to go higher. Okay. Does that make sense? So that's how you know when price is going to respect a level or price is not going to respect a level, depending on what you have here. So yes, sometimes this might work, but it's not high probability. So if you are choosing between high probability and low probability, this is how you choose it. You want to see what is down here or what is up here that should cause price to drop or to rally. And I've given you the tools. Okay. You want to see something like this, or you want to see one big move away from that level. Those are the two characteristics you want to see. If it does not exist, it's not high probability. Therefore, there's a chance that your trade might not work out. All right. And if you're doing this, let me bring in let me bring in Enigma just a little bit. If you're doing this on the higher time frame, i.e. weekly, monthly, let's go to the weekly and monthly time frame. All right, let me use on the weekly because the monthly is too much of a big time frame. Okay, let's do this one. Say between this high and this low. All right. And because of this big candle, we want to see a continuation to the downside. So we're going to measure this high to that low. Okay. And we want to see price come up here and go down. Now, if you're using Enigma and you're doing this on a higher time frame, if price trades up to here, then you start looking for your day time frame, your lower time frame, to confirm that it's going to go down, and then you trade Enigma that way. I'm just giving you ideas. Okay, for Enigma users, I'm giving you ideas. When price retraces up here, then you can start looking for price to reject. As soon as you start seeing the rejection, which obviously our VIP members have told you what to look for. I think I've already said it here on Facebook. You look for that price pattern, and then once you see that, then you start selling using Enigma. You sell, 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 sell until it comes back to this low. All right. So that will be the end of today's session. I'm just giving you something that will help you kind of put high probability on your side anytime you sit in front of the screen. If you want to day trade it, if you want to scalp it, don't forget time. Okay. If you want to day trade it, if you want to scalp it, don't forget time. If you want to swing trade it, if you want to position trade it, then the price aspect is important. You want to see price giving you those elements. And then once you see those, then you can start using them. All right. So I know it's simple, but it's highly effective. Okay, I can go through price and show you lots and lots and lots of examples. I traded this one. This was yesterday's entry. If you pull the fib this low to the high, time, landing. If I drop down to the lower time frame, you see you go down. Let's see, right? London, 7 o'clock. We got there, Asia, but nothing happened until we hit London, and then boom, it went up. Okay, that's a trade. I still have I closed half of it. I still have a small piece still running on this trade. Okay, and what else? What trade? What trade did I take? This one, and on the H4 as well. This big drop. Okay, this big drop here. If you put a fib high to low, 618, you sell short, price to go down. All right. So I think I've given you enough for you to go and back test and learn, and then see how it can change the way you trade. Again, if you want to learn more, I'm gonna do as usual the auto call. If you want to learn more, if you want to learn really what price does, join me in the EFX community, and I will give you everything that will help you achieve success in the market. The only thing that you are going to need is your own mindset. You have to tame your monkey mind to be able to do the things that I'm showing you, because that will be the only thing that will impede your success. So I'll give you all the tools that will help you obviously be successful, but then you have to do the mindset work so that you can now be successful, because I cannot do the work for you. You have to do the work yourself. All right. So join me in EFX. I'm going to drop the link. Join me in EFX and let me turn you into a trading monster. Once you put in the work, you will automatically become a trading monster. All right. So that's the link. If you want to ask any question, if you want to give me any comments, just drop it below this video. I will do my best to come back and answer you. If you have any obviously concerns as well, hit me up and I will have a chat with you. Until then, have a wonderful week. Stay blessed, and I will see you next week with another insight into the market. Take care and have a good evening.